All right, all right. Good morning, good morning. It's nice to see you guys here. We already have a good little group coming in with us this morning. It's great to see everybody up first thing in the morning, ready to look at the stock market today. Yesterday we had Power Hour, and we left with our feeling pretty good about that one. We made over $500 using the Minesweeper strategy, right? Minesweeper. So today we're going to say, okay, well, we made $500 yesterday. Where are we going to put it? We're going to bring it over here and we're going to put it in the stock market and we're going to invest it. So this is our stock market strategy. And we're going to go through and we're going to just do a little counting and measuring, and we're going to see where markets are at. We've got some that we've made good decisions on, some that we've not made such good decisions on, or that markets just haven't played through in our direction yet. So we've got some of that. We'll see if we want to take them off, readjust them, or if we just want to hang on to them. So we'll have to come through and see. I want to start off with our big winner. Of course, you always want to start off with the big winner, right? Let's come down here and let's see if we can do this. There we go. I don't know. That's not good. You can't see the ones that are, let's see, where can we put land? Stick land up there. How's that? All right. Now you can see down here in the left-hand corner, you can see all the symbols that we're looking at here. So this is Avgo, Broadcom, and this was breaking out what we thought was going to move into the next level or go into the next Darvas box. We'd completed this Darvas box, and we were looking for it to go to the next Darvas box, and boy, did it go to the next Darvas box. We put on a synthetic long position, so our outlay was very small in comparison to what we might have if we wanted to buy 100 shares. So we paid $1,600 for a long call, and we received $1,500 for the short position, and so that ended up being, $100. So we put in $100, and we're up $5,742. That's a pretty good trade, being able to put in $100 and turning it into $5,742. Not bad, right? Not bad. Not bad. That's one of the reasons why we like synthetic longs. Well, Lan, why don't you like synthetic longs? That sounds too good to be true. Well, it is almost too good to be true, but there are some downsides of putting on synthetic longs. They have an expiration date, right? So you have a limited amount of time to where you can hold on to those babies before time expires, and you lose your $100. So, well, these we put on at expiration 93 days because we thought we were going to use this, and we didn't think, who expected Avgo to Broadcom to do this? No, nobody. So when it took off like that, that's a lot of money really fast. We put on 93 days because we thought we might use this to just sell some options against it, right, and collect some premium on the way up. And it's almost like free money. I mean, you put in $100, and then you get to sell covered calls against it for the next 100 days. That's pretty cool. But this is even better. All right. We're not going to complain about this type of a move. Now, what can we do? We got 93 days left in this long position. We can just hang on to it because Avco probably continue to rise. But oftentimes the market that does this will flush back down right before it starts to just kind of do something like this again. So we got to take that into consideration. We don't want to, give up all of our money. There's the chance, of course, that it could do this again too and go one more leg, but the chances of it doing that are a lot less than doing the little tired thing. You could come in here and we could sell a call against it, right? Come in here and collect some premium, do a covered call, 30 days, sell a call, stick it up there. That's $585. That'd be pretty cool if you wanted to do that, right? And collect that $500. But you know what? Look how fat the premium is if we put it right there where the market's at. That's $1,000. So we could collect another $1,000. How far would the market have to move to make $1,000? Well, right there's how high it would have to go to make $1,000 on 100 shares. This is $237 per share. So you could pick up $1,000 right there, or you could wait for it to go up and go $1,000, or you could wait for it to go down and lose $2,000. Which would you prefer? I don't know. We don't know what it's going to do, right? So you could take your profits. You just say, all right, well, forget that covered call. We just dump out of it and take our $5,700. That's a pretty good thing to do too. But then you're like, but I don't want to stop participating in this. You could sell your call with 2 days left to go. Sell a call right here and take your profits that way. That's going to add an extra $497 to your position. And if it goes above there, You could even pop it up just a little bit. 300, we like the $200. There's 397. You put it right at the money, that's $500. So you collect an extra $500 to sell your position. What if it flushes? Well, you still get your $500, but you lose what it flushes. So you've got that. So there's a number of things you can do. One of the things you can do is you can roll this up. We can come in here and we could roll it up, take some profits that way. There's always you could roll it all the way up to where it's currently trading, take this one off and put a new one on right there if you want to do that. Probably not something we want to do though, because what if it flushes back down like we think, What if we think it might come down? I'm always such a pessimist. I think the market might come back down to a half or 50%, back down into this region here, kind of flush off there. Let people want to take their profits, right? So what if that happens? I don't know about taking off and going to the moon one more time. Doesn't mean it can't, certainly can, but more likely it's going to flush back down into the Fibonacci sweet spot, right? I don't know. That's just what the Delta Kona probability tells us. And we like to trade the Kona probability, don't we? Look at all these probability statements that we read in here before we put this position on. So we like to trade the probabilities of what markets are going to do. And the Delta Kona probability says this thing's going to come back down to midpoint down here. Doesn't mean it has to. It's just the probabilities. It's a high probability it's going to return back down there. So if we sold this right here, let's just come in here and sell this one. We're going to pick up another $557. And if it goes above it, well, it'll liquidate our position. And that's what we want. We want to take our profits, right? If it falls back down, well, we'll still get our $500, but we'll lose it on the shares. But that we're going to do it with only 2 days to go. So it's going to happen on Friday. So we could do that. We just come in here and say, look, we're going to pick up an extra $557, put an order in to sell our position out right there if it stays up there. If it falls back, we'll get our $500, but we'll get out. We may tomorrow look at this and decide that was the wrong thing to do and adjust it again. But right now we can just come in here and we're going to sell that baby. We're going to come down here to 5555. Oh, we're going to sell a call. Well, where did it go to? It already moved on us. 5555. I think that's where we have to go. 5555. 556. So it's moving 55. Oh, now it moved to 45. 45. There we go. Let's place that order. And we got it. All right. So we sold our position out right there for $550. Right at the money. That's all we're doing. We're just saying, hey, we're going to sell it. And somebody could exercise tomorrow if they wanted to take our long position off. But they might also, right? That's what we want. We want them to sell out, take our profits. We'll see. We'll see what happens. And just make an extra $500 to try and sell this out and take our profits off. All right. So let's come in here let's start at the top. Let's go to Apple. Apple, we put a synthetic short position on the market just because we had this massive rally. And it's up here at the very peak of this massive rally. We put too many tools in here. Let's get rid of some of these tools. That one we'll keep. This one we'll keep. We got too many tools in here. All right, so that's what we want to keep right there. Let's get rid of this one. Let's just get rid of all the arrows. Okay, so this is our plan, all right? Our plan is that we've got a Fibonacci bow tie in here. That's what this is, Fibonacci bow tie. We take this previous high right in here, right? We then look for the market to cross and break above the previous high, which happened right here. It goes up. We expect it to go the same distance from the pullback from here to here. That is what we expect the market to go one more time up there. And that's where it's at right now. It's right there. And that's why we put the synthetic long on. We kind of put it on there just a day early, a couple days early. That's okay. It's gone up a little bit more. We're down $555 on our short position. But we're looking for this market to peak out up there at the top of the Fibonacci bow tie. It doesn't mean it can't go higher. I mean, it's Apple after all. And people do love Apple. And it could continue to rally. It could go up to a 161.8. Let's get rid of this one here. Let's get rid of this mathematical calculator. Let's see if we can. I want to keep this one. send to back, and we'll take this one off, and we'll redraw it. Okay, let's put this one back. Well, it was already there. Let's do it this way. If we go from this peak back here, see that's a 200%, 190, 200% would be right up here. If we go up any higher, 200, where's our Fibonacci projections on here? Let's see. We may have to do it this way. We'll go like this to here, and then we'll right click on that tool and we'll say Fibonacci projections. So we got 127 up there, 161.8 up here. Do you think the market's going to go all the way up there like that? Just keep going all the way to 127, all the way to 161, all the way up in there? Good. Nobody knows, right? Here, I got to losing my voice. Hold on a second. Hold on a second. All right, drink a little tea. That always helps. And so we're just looking to see if this market wants to turn around and come back down at all. Just give us a little bit of a retracement. The Fibonacci bow tie says it should come back down and test this low right here. People take profits and they'll push it back down to this level here. That's what this is saying. So we got this little bow tie in here. That's a Fibonacci bow tie. And we surpassed our top. We thought, well, we'll put in here this order just to see if we can't get a short position on that rebound. And it hasn't rebounded yet. Maybe we got in a little early, obviously. But we're up here in the second. We've moved into the second Darvis box. And so we're moving up into there. Still looking for it to break down. I'm not willing to give up on this yet. We're just going to hang on to it. We're only down $500. And we don't have much into it because it's a synthetic. So we received 440 and we paid 676. So we're only into it for what, $200. So we're into this $200. We're down $500. So considering that we only put $200 into it, and we're down 500. That's a pretty bad ratio. But we just need Apple to give a little back right here on this massive rally. And we see the MACD starting to roll over the top. The chalk and money flows already rolled over the top. That's what was giving us pause up here and saying, hey, maybe this is going to come back down and give us that little pullback. And then we're going to anticipate that once it pulls back a little bit like this, we'll look for it to just continue that uptrend. All right. So we just want a little pullback. That also give us the opportunity to, if you wanted to, you could come in here. It's a little early. We like to let the market come to you, right? But we could come in here with a 30-day option and we could sell a put and collect a little premium down here if we wanted to. Down around, how much would that? That'd be $135 just while we wait. That would help us pay for some of and then we could get our shares down in there too, which is what we want. If the market comes down, we'd be more, you make a whole lot more money waiting for the market to come to you and then put your option in to buy. Right now, it's only $135. So, and that's for 30 days. Yeah, you'd be better off waiting for it to come back down here and then put it on at the money and make $500, right? And you'd be closer to your expiration and you'd be more likely to get your shares and you get a lot bigger premium. Question is, it might not come back down that far. If it doesn't come back down, then you give up the opportunity to make $134. So you say, well, I'll put on 134, and if it comes down, I'll put on a second one and make the 500 and get in with 200 shares or roll one down out of the way. You could do that. So we'll do that. Let's go ahead and we will just see if they'll let us market into it. Yep, they did. All right. So we sold that one. We could pick up $131 if the market will come back down. Well, if it does, we'd like to sell another one. Let it come down to us and make more premium. That's still, this is a way of doubling down, saying, well, we really expect the market to come down, but it's the way of making money if it doesn't. So if it doesn't come down, we'll just collect a little bit of premium against our loss here. All right, so let's come in here and go to Airbnb. Airbnb, this is where we've done our full Elliott wave count. We started off with an A1, B1, C1. So that's drive 1, drive 2, drive 3. Inside, we had a couple little moves here. The B2 came in. We got no C2. We got X1, X2, X3, SA1, or X3, A1S. That's our first downside. That's our ABC. We're still coming down. We're testing this second low right in here. And it bounced. So it's bounced, went back up, and it's testing this one more time. What is this? Oh, we have a long call. That's why we're down, because we bought a long call right there. We thought that was going to break right there and go up from that point on that A2, and it failed. That A2 failed right there. Let's see if I can figure this out. So this is the A2 that failed. A2 fail. A2 fail. Okay. So now what are we going to do? We're long call. We got 184 days. The reason we did that was so that we could sell a covered call against it, which is making $165. It's up $100. So that's just our covered call up there, and it's still got 30 days to go. And we're coming down. We could roll that down, or we could just sell another one. How many do we have? We only have one long. We could sell a premium down here and collect something on Airbnb as it's coming down here. Say that we could pick up another, pick up some more shares. If it's right back here at the Fibonacci sweet spot. That's the thing. And Airbnb is pretty good company, right? So it's sitting right here at the Fibonacci sweet spot right now. Dead center of the Delta Kona probability. Chances this thing comes down. This would be a good place to start buying some in anticipation of a continuation of the uptrend. Let's go look at the fundamentals. Should we do that? We haven't looked at the news today either. Oh, we wanted to kind of look through this as well. Nvidia's up big. Look at that. Nvidia's popping hard today. Now's a good time to start buying some Nvidia. I think we're on the mend here with Nvidia. Tesla's down hard today. But look at all this string of Pfizer. It's actually showing its rear and its ugly head starting to go up. Walgreens got some action going. Bristol Myers, United Health starting to bounce. That's at $500 a share though. We got CVS, $46. That's starting to bounce. Some of these stocks are starting to bounce a little bit in here. Might be fun to go look at those. Palantir giving us a little rally. Micron's popping a little. Teradyne popping hard. Western Digital. Uber. Ooh, look at Uber. Uber's popping hard. SMCI. That's flushing. Avgo. Broadcom. That's the one we just looked at. And we got a little money in there. We put that one to try and liquidate our position, take our money off. Disney's popping a little bit hard there too. We could go take a look at all these. Let's we're going to come and look at the news though let's go look at, this is Airbnb. Airbnb. I'm just looking for an opportunity to pick up some Airbnb. Let's see this thing here. Earnings per share in 2023 were $7.24. Big rally. Sales in billions, way up 992. They're not buying back their shares. So let's see. That's 2023. What's 2024? Let's come in. PE ratio is 46. Forward P. What the? Earnings per share trailing 12 months. Oh, 285. That's not good. They were 725 last time. Now they're only 285. What's their sales? 10.84 billion. Well, that's a lot more. They made big sales, but they haven't got big earnings per share. Huh. That's interesting. In September, they got downgraded by Argus, as if Argus knows anything. Who knows? September 27th, Raymond James, he resumed, whatever the heck that means. You have to go look at his history and find out what he did so that you can say that he resumed. December 14th, Abandoned train car transformed into Airbnb is a hit. It took $150,000, a lot of love, but now it's making $105,000 a year. 3 facts about Airbnb you must know before buying the stock. Motley fool. Nobody listens to you guys. You guys are such idiots. I shared the bathroom with an Airbnb host to avoid New York City hotel prices. This is not telling us anything about making money. All right, so it's all on us. What do we think this baby's going to do? We're right neutral on the MACD in here. Huh. That's no news. It's just kind of a dead market. Might be good for an iron butterfly. We could just go put on an iron butterfly. We got a long position in here. Wow, we ought to just sell. I don't know. Let's come in here and let's do something. I want to do something. Let's see what our options are in here. See how much volume we've got. Nobody's trading anything there. Nobody's trading anything there. That might determine it anyway. There ain't nobody trading this thing. 30 days. There's where everybody's hiding. 30 days. I don't want to hold on to something for 30 days on these guys. We could sell a put at the money, and we could sell a call at the money, pretty close to at the money. We receive $1,000 over the next month. That would be a 27% return. We got no coverage, so we'd have to have a 3,000 run margin, $3,521 margin. We better, if we're going to do that, we better take a note because Lance forgets when he comes back here. We have a long call. Is that a call or is that a synthetic? Can't remember what we did here. Positions. Chart only. Nope, it's just a long call. That's just a poor man's covered call is all it is. We bought a call, paid $2,000 for it in anticipation of a rally of this thing over the next 184 days, and then we sold puts against it, or sold calls against it. So we got a long call. Well, that sucks. Okay, we have a long call. Poor man's covered call with sold call at 30 days. And now we're going to sell 2 at the money. We're going to sell a straddle. Sell a straddle. 30-day. We're going to sell a 30-day straddle at the money. Just to collect premium while market sits dead. Okay, we'll try that. Go back here. We're going to collect some premium on this one. Dead market. Put, call, sell to open, buy to open. 940, 957. Ooh, that's a nasty spread. Not too bad, I guess. Okay, let's see if that works out for us. I don't have any protection on it other than this call right here and this short here, but that's not real protection. So we're going to see. All right, AMD keeps flushing down. I've heard a lot of positive things about AMD. AMD is supposed to get in the game. It's sitting on the sideline right now, and it's trying to get into the game with AI, and it can't compete. It's having a hard time competing, and so it keeps flushing down. We sold a put. We're down here trying to pick up some shares, and that's really what this is all about. We got one in here at 32 days. In 2 days, we should get some shares, 100 shares of AMD. And on this one here, we've got 30 days left on that one. So we're going to wait and see what happens here. This is a wait and see, nothing to do. All right. Broadcom, we already did that one. Alibaba. We're down $800 on Alibaba, which is a little frustrating because we got this synthetic long here. Is that, do I have notes on this? We bought 3 call, we sold 3 put. So that's our synthetic long. And on the synthetic long, that's the one we're down $1,000. Wow. That bit us in the ass, didn't it? I wonder if it's because, well, it just is what it is. I don't know. Something. Why in the hell? That was a stupid thing to do. What was I thinking? I must have been just teaching you something because there's no way I should have done that at all. That was the dumbest thing in the world to do. Oh, no, it's not. I had my mouse on the wrong thing. That wasn't so bad. All right, 4,000. Okay, it's just down. That's all. So just down a little bit. Okay, so we have a synthetic long position. Quantity 3. So we really went in on this one on Alibaba. Quantity 3. And then we sold 3 covered calls against it. All right, so we're just waiting for our premium to decay. We've got coming into us, we got $200, $300. That's sad. We want it to go up. We need this market to go up. Synthetic long position quantity 3, sold 3 covered calls against it. We did a vertical distribution on those calls. Okay, we'll just wait on that one. Nothing we can do. Just down $800. Blackstone Group. Now that one's doing just what we thought. It's flushing back down to our circle. And we didn't take an advantage of it in any way. We are waiting for it to come down here so we can sell a put against it and collect some premium and then get long this market. That's what we want to do. Waiting for it to move back to Delta cone. Sell a put, get long. Okay, so that's what we're doing here. We could do it right now. You could come in here and sell one, but it's not a very good timing on that. Put that in there, sell a put right there. You're going to make $83. Big whoopee grunt. Just wait for it to come down there. Then when you sell, it'll be more. It'll be like $600. And you just wait for it to come down there. You make a lot more money. And then you're more likely to get what you want too. How many drives was that thing? Drive 1, drive 2, drive 3, drive 2. There's almost like 4 drives in there. Start new here, drive 1, drive 2, drive 3, and it broke. All right, let's watch that one close. CBERE Group, same thing. We're just waiting for it to pull back. Wait for pullback. Enter long at Delta cone. Where is your Delta cone, man? Draw it in there. Well, that's a tough one because it's got this long thing here. Technically, it should be here, but we're starting this trend from way up here. We could come in here and say right in here. If it just comes into there, we'll try to get long. Wait for pullback, enter long, Delta cone, sell, put. Waiting for market to come to us. Come on, market, come to us. All right, Delta Airlines. This was a tough one. We thought this was going to get a little bit of a retracement too off this massive run it had. Beautiful 3-drive pattern, drive 1, drive 2, drive 3. We're up $92. That's it. We need this thing to fall a little bit more. Nothing to do. Just wait on that one. Dana Inc. had a massive run. Look at that. Just waiting for it to come back down to the cone. So we draw our Fibonacci ruler in there. That would be drive 1. Come in here. So that's going to be A1 right in there. So this is coming back. This is X. This is going to be X1 right here. First exit. So now we're waiting for it to pull back. How far is it going to come? We wait for it to break the yellow dots, and then we're going to anticipate a rally continuation up, but we're looking for it to come back here into the Fibonacci sweet spot, back into the delta cone of probability, right? So that's where we'll look for it to come back down into. But if it turns and starts to go early, we may have to get in a little early. But again, we're just going to wait. Let's see if there's any options on this thing. Yeah, we got some 30-day options in here. Nobody's trading it, though. Can't do options. I don't even know if I want to do it if we can't do options. We could just buy some shares. It's only $10. We'll buy some shares. Okay, if it pulls back here, hits the green, crosses the yellow dot, that's our signal. So we're going to come in here to our notes. We're waiting for this small share cost stock to pull back to the delta cone, where we'll buy some shares for B1 entry. No options. Sad. All right, charts. Let's go to Dell. Dell is right there, isn't it? So we sold a put. We should pick up some shares there. We only sold it for 166. $11,000 worth of shares on Dell is what we're looking for. I guess we just wait for that one to go. Let's see if we come in here. We sold the options. We sold a put right here. You see that? It's so much better just to let the market come to you than to sit there and put those options in too early. Look, we could sell this one right now for $522, but instead we sold it for $166. And we get the same result. Just wait for it to come to you. You don't have to get in there so early. Yeah, everybody gets anxious. Just have patience. What is it that Warren Buffett says? The stock market is a place where the patient take money away from the impatient. So if we would have just waited and sold our put right now today instead of then, we would have made $522, but instead we put it in there and we made $166. So that kind of sucks. That's why you wait. Just wait. And then we are in here at trying to pick up some shares on Dell. Do we want more than that? Dell. I'd love to have some more Dell. We could sell another one down here. Wait for it to go down there, Lan. It might not go down there. You make $152 even though it doesn't go down there. I know that's the name of the game. You can always sell another one right there at the money and pick up 200 shares of Dell. But that would be $22,000. We only have $34,000 in buying power. Can't do it. Can't do it. Okay, let's just roll along here. Digital Reality, still waiting. We're waiting for that one. Extra. Oh, look at that. Extra space storage. Holy smokes. Man, that thing is flushing like a toilet. Let's go look at this one, because look at this big, massive run. That thing, wow, look at that thing. Go to the 50%. They've taken this thing through the accumulation distribution step model, just like a train on rails. Okay, let's do our little bit of that's our first geometrical. Boom, look at that. And clear out to there. They paid no attention to that at all, did they? So what about this one here? It's all come up through here. That one was a little soon. Our geometry is not working out too well in here. It looks like that's where they respected that move the best, and it's not the best. You got a few spots in here. It broke right there. It didn't touch it there. Let's get rid of this one here. Oh, you stupid thing. Put my Fibonacci ruler back. All right. So now we're down here at 61.8. Man, that is a move. Man, oh man. Not that that means anything. But that baby broke. There's that 200 period moving average right there. Okay, we got to go look at extra space. Let's see what we're going to do with this thing. EXR. Look, it's giving dividends. $1.62. Wow, that's actually pretty good. I mean, it is $153 a share, but quarterly $1.62 dividends on extra space, that's pretty good. That's pretty good. $1.62, you got to admit, that's pretty good dividends for a stock. And this thing's, look at, earnings per share in 2023 were down. Oh, downgraded. Wells Fargo downgraded. Jeffries upgraded back. That was back in September. They downgraded him in October. How good of that were they at that? Oh, they downgraded him right here in October, and man, it flushed. So way to go, Wells Fargo. So what have we got here? Sales are at 3.23 billion. That's a lot of sales. 2023. They don't have 2024 sales in here. How come we're not updated to 2024? So this must be 2024's up here because they wouldn't be shit. Yeah. Okay. 3.23 billion, and they did in 2023 2.56 billion. Sales are huge. What about earnings per share? Earnings per share, trailing 12 months, 3.78. Oh, well, that's not good. 2023 was 4.74, and now they're at 3.78. Year over year, well, year over year, it's 4.57. And that, oh no, that's exactly the same as 4.74. So they're right on the money. Huh. But their sales were big. And now their share price has fallen way back. So their earnings per share, well, that's what their earnings per share is 457 at today's rate. Today's rate is 153. Income is 806.89. And they did sales 3.23 billion. And look at their shares outstanding. They even increased the number of shares. We should be buying this up like it's. Problem is, it's a REIT. Who likes real estate REITs? Not me. I don't know. That's like $15,000 to put on 100 shares. Let's wait for that. We're going to keep that one on our radar because is there any options in it? Because if there's no options, there's no reason to even play with this because we're not going to buy shares on it. 30-day, there ain't even any options. Why am I wasting my time with you? Bye. Get out of here. You waste my time on stupid REIT. Digital Reality Trust Inc. Another REIT. Well, at least this one's got options on it. I don't want to trade REITs. Laboratory. IDXX Laboratory. That's too big. Let's not even mess with that one. International flavor fragrance. Oh, international flavors and fragrances. Why is that down there? A lot of neutral opportunities in this one, and it goes sideways a lot, doesn't it? And we're probably going to have a big sideways trend in here. What's the options like on it? About 30 days. Oh, they suck. Bye. See ya. Johnston and Johnston. Oh, we love Johnson and Johnson. 3-drive pattern. Drive 1, drive 2, drive 3. We're at the bottom of a 3-drive pattern. We sold this option with 30 days to go. Right at, well, wasn't quite at the money. Pretty close. At the bottom of the Darvis box. Look, it went up. Thought it would go up into another Darvis box, and it just died. Come right back down to the very bottom of the Darvis box. We received $165 by selling that one, and we've still got 30 days to go on it. Boy, it's really deep in the green, though. Look at that. On the chalk and money flow, it's saying buy, 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 buy. Let's go look and see why Johnson & Johnson is suffering. Johnson & Johnson. Wow. Earnings per share have been going down, down, down. How are they right now? Earnings per share year over year, 10. That's good. Earnings per share trailing 12 months is 6. That's even good. Good compared to 2023, and that's 605. Earnings per share year over year, that's counting the whole year. 10.58. That's really good. What about sales? 87.69. That's even good. Not as good as 93, but it's better than 85. 87. Oh, they're buying back their shares. They're buying back their shares. What does that mean, Land? They're buying back their shares. Well, they like to tell you that it's so that they can share their profits with their shareholders. Really what it means is that their stock is flushing, and so they're buying it back so that they can prop it up. It's the way of propping up your stock when you got problems. So they buy back their shares to prop up their stock. Earnings are falling, but they're turning it around. I mean, you know what? You can't really. I mean, Johnson & Johnson, during the pandemic, they sold like oodles and gobs of stuff, right? Because everybody was running to the store to buy everything that Johnson & Johnson sold during the pandemic. So if you compare everything against 2021, that's not fair. You should really be comparing it against 2020. And that's more fair, in my opinion. I think this is still a good sell. I think this is still a good buy. The smartest dividend stock to buy with a $500 right now, Motley Fool. Well, since Motley Fool said that, I don't believe him. I hate Motley Fool. $1.24 dividends. That is a good dividend. Got to admit. Of course, that's why it's in our list. Because we like to buy the dividend stocks just in case they pay off while we're holding it. But like, you have to wait 3 months. So you have to divide that by, to make it realistic, you have to divide that by 3. What's 124 divided by 3? 30, what, 20, 31, 30, about 40 cents. 40 cents a month. So it's good. It's good, but they don't pay it to you. They only pay it to you on the quarterly because they're cheap. They don't want you to have it every month. Compound it too quickly. Wouldn't want that. All right. So the question is, do we want some Johnson & Johnson? We certainly do. We would love to have some. That's why we got that put option in there. Guess there's nothing else really to do. We're at the bottom of a 3rd drive. It's now time to buy. You want to buy it outright? Well, you know what we could do? This is catching a falling knife. It hasn't made a little ABC pattern. Generally, we got the 3-drive pattern down. What we want to see is we want to see a rally, right? A little pullback, and then the rally there. So you get that little pullback, and what is that? That, my friends, is a head and shoulders formation. So that's your head and shoulders formation. That's your right shoulder, and it's the breaking right there. That's the indication of the market. So if you try to buy right here, like we're trying to do with this one here, you're trying to get in early on the head. At the bottom of a 3rd drive, that's not a bad bet, although it's not a bet. It's an investment. All right, so that's a pretty good place to be trying to get into your position right there, right now. As this thing turns and starts to make that rally. It's a little even, actually, a little green today. So If you wanted to put some money in Johnson and Johnson, you'd have my blessing. And if it comes back down a little bit more, heck, dollar cost average. Nothing says you have to buy 100 shares. That's only how much you get with an option. It's $146. You could buy, if you want to put $500 in there, yeah, buy 3 shares. Put $1,000 on Johnson and Johnson. How would you do that, Land? Just come in here and buy them. Go one, count it up. 1, 2, 3. You want to put $1,000 in there? That's 7 shares. There you go. We just bought 7 shares worth of Johnson and Johnson. I feel embarrassed only buying 7 shares. You're not just buying 7 shares. You bought $1,000. That's not embarrassing. Stop thinking like that. Okay, come into the next one. JP Morgan Chase. I did a video once. It was titled, "They laughed when I bought 1 share." But hey, there's some stocks in here where 1 share is 10 grand, right? I bought 1 share. Well, $500 investment, that's not bad. There's a lot of stocks in here for $500 for 1 share of stock. $500 a month investment, that's pretty good. Buy 1 share. There's nothing wrong with buying 1 share. I don't care how big you are. You might have a $100 account. Well, you bought 1 share of something. There's nothing wrong with that. Just get started. Buy 1 share of. All right, JP Morgan Chase, McDonald's. Here's McDonald's. McDonald's Corporation. Well, we're just sitting on that one. That's that little head and shoulders we thought might break higher. We're down here, not quite in the Fibonacci sweet spot. We came down and touched it right there on that head, didn't we? But that little rally right there is not coming through. What are we doing here? We're up $90. What did we do here? Is this a synthetic? Received 1,000, received 400, paid 1,200. Yeah, we got a synthetic long in here with a covered call on it. We just put that covered call right up there. We're expecting this thing to rise. And we got a sold put here to collect $300. So we might get some shares, but let's go see down here. Did I write notes on this one? Oh, I did. Synthetic long with a covered call and sold a put to collect premium and get assigned 100 shares. There you go. Land took notes. McDonald's, there's nothing for us to do. Just look at it. Morgan Stanley. We put some shares in. We sell a put right there? Why did we do that? Why would we sell a put right there? Oh, we might get assigned right there. We'd rather get assigned down here. Morgan Stanley. Are we going to feel bad if we get assigned 100 shares right there? Probably not. All right, let's go to Microsoft. Man alive, that rally is massive. And we caught it, 47 shares. We had 100 shares, but we had a covered call, so we had to cover the covered call and let that thing run afterwards, which was a good move because it went much higher than our covered call. I think our covered call was like right in here, right? And so it's made money after that. And we didn't cover it again. Now, the thing is, we're long 47, and we can't do a covered call because we don't have 100 shares. We need 100 shares to do a covered call. And this thing is going to go, it's got a red bar. We're looking for it to come back a little bit, right? I mean, I don't think it's going to come all the way down to this little mountaineer here. Let's see, send to the back, and we'll grab this one and put that up there. So we may get it to come back down into here somewhere. That's what I would like to see. And then break the little yellow dots and go to the next drive, right? That would be drive 1. That'd be really nice to see. Drive 1, little counter trend, drive 2. We could get in right in here. Pick up another 100 shares. But we're just guessing here. We haven't got any idea. We haven't got any idea where this is going to come out. We got to get we could try and Fibonacci project it. We got so many little bumps in here. You can't really give a Fibonacci projection off of there. We could do this one. That's not going to do much for us, though. That's just a 2. That's where it went this time. Right to 200. Look at that. Let's take this off and see if we can go back one more. There's nothing to go back to. If we go back to that one, that says that it would drop all the way to there, but I don't trust that. We would generally like that to be lower or at least equal. That's where that thing looks. That would put us back at least to right. Well, that's where our little circle's at. We should be a buyer right in here. We want to see this thing come back a little bit and give us a geometry, right? Remember geometry, we need a triangle. Right now we're at the first leg of the triangle. We need the bottom, we need 3 points, 0.1, 0.2, 0.3. And we're waiting for 0.3. And then once we get 0.3, we can project the next triangle, the next geometry. It's all about geometry. 1, 2, where's that going to come in? We don't know. But if it comes in right in this region here, that would be our third point. And man, I don't know. That projection is, how often does it make two reflections that steep? It doesn't. That's just too much right there. Let's come in here with our GAN fan and show you. GAN is telling us this thing. Well, if we listen to GAN, let's send this to the back, send to back. GAN says this thing should come right down in here. That's what GAN says. So we're going to just wait. We're going to wait on Microsoft because we want to get in on a little bit of a pullback, and then we're going to anticipate another big rally, and we want it to stay above the 2-to-1. See, this is riding right up 1-to-2, and that's too high. That's why it's got to flush a little bit and come back down that 1-to-1 range, back into this triangle wedge here. See, GAN says it should stay within this range here, like that. So it should stay inside there, and it's all the way at the very top of it. We need it to come down and give us another opportunity to get in. Mr. MicroStrategy MSTR. Man alive, I thought that thing would go up. This is Bitcoin. And it's a company that invests in Bitcoin. And Bitcoin is going up. Let's go look at BITO. BITO. Well, it's pulling back a little bit. It got me a little Bitcoin. I'm holding on to some Bitcoin. It's done pretty good. I bought it at 64,000, and it's up over 107,000 now. I think this is trying to break right here. See, we had this nice little rally. Drive 1, drive 2. We're coming in here and we're trying to go into drive 3. That's a tiny little rally right there. I almost want to call this drive 1 right there because this thing kind of sat neutral for so long across there. Like that. And then it broke out. And so I'm going to be optimistic. Can I be optimistic and not call this our drive 1 down here and just call this drive 1? So this is drive 1. So if we do that and we're optimistic, that I'm saying that because I want to get a third drive out of this thing, C drive. And maybe I'm saying that because I own it, right? A1. We're making this a B1 here. So let's call that B1. Let's call this one here A1 right here. A1, B1. If that's the case, there's our breakout, and away we go. I mean, technically speaking, we could, hindsight will tell us if this is A1 down here. And that's our first drive, A1, B1. That would put this down here. If I can grab these damn handles. B1, and then this would be C1 up here. But this is the pessimistic view. And who wants to be pessimistic in today's market? Not me. I don't want to be pessimistic. I want to be optimistic. So there's where it sits. And that's BIDO. And BIDO actually gives a pretty good dividend. Look at this. Let's go over to here and I'll show you something. We have some options in BIDO. Some of us bought options in BIDO. Bruce, do you still have your options in BIDO? Let's come in here and go look at BITO, BITO. Look at BITO. It's got pretty good dividends. Pays them out monthly, and for every share you own, it gives you 99 cents. That's good. Let's do a little math in here. Let's say that, for example, take up your little calculator and do some math. All right. So let's say you put $100,000 into BITO. Clear, clear, clear. $100,000 divided by 26.84 equals, that's 3,725 shares of BITO. And every month they give you 99 cents for every share you have. So that would be $3,725 in dividends paid to you. If you had $100,000 in BITO, you would make $3,725 in dividends every month. That's what I call UBI, Universal Basic Income. All right. That, for a lot of people, could replace their Social Security. Bruce says he's still holding on to his BITO options, currently up 150%. Sweet. Sweet. I think you and I have the same number. I think we both have five shares. I started with 10. And then when the market popped up there and started going sideways, I sold 5 of them off. So I still have 5 options, but I took 5, put the money that I had made and invested in BITO, I put it into BITO itself so I could collect that dividend, because that's pretty good. $100,000, you put $100,000 in there every month, they're going to give you about $3,725 in dividends. Now that's Bitcoin, and it's you have to be careful because it fluctuates all over the place. And notice that it did kind of flush, got kind of nasty down here. Going this direction, so you give up a lot of your dividends in NAV. That's why I keep harping on the fact that on the short-term basis, you don't really care what the NAV of the market does, the net asset value. If you're trading these really high dividend stocks, it's okay if they fluctuate up and down. You don't want to worry about that. But overall, you want them to go up, because if they overall go down, they wipe out your account and the dividends can't keep up with it, can't cover the losses. So you need a stock that's rising, and you want a dollar cost average into it and buy the dips and continue to increase your share size. But you need a stock that's rising, that's got these high dividends. You don't want, let me show you a really cool one. UTLY, I think it's U, or is it YT? UTL? Nope, that's not it. Hold on. It's UTLY or ULTY. 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 You look at that and you're like, holy cow, look at the dividends on this baby. Well, it's 70 cents on that one, 83 cents on this one, 82 cents on this, not as high as BITO, 98 cents on this one. But look at what it's been doing the whole time. It's been going straight down. And so you just lost all your money. I ran a historical back test on this. Kirk says he's got 100 shares of BITO. Nicely done, man. So I'd run a back test on this one, and the dividends couldn't keep up with the loss on the NAV. And so this is not a good one to be in, because if it turns and starts to go up, but this is investing in utilities, and right now there's no reason to be in utilities, right? Utilities are a safe haven, and the market's going to the moon, so utilities are going down. So if it gets to the other way, where we go into a really strong bear market and all of our wonderful stocks that we love start to flush and go down, which actually a lot of them are, I mean, technically speaking, but what's holding and propping the market up are all of the magnificent seven, right? The big 7 tech stocks holding the whole market up. If you go look at the Dow, just look at DIA, look at this. It's had a bad flush right here the last little while. It's kind of coming down, right? Overall, it's been going up, and that's nice, and we love that, right? But it's got this little flush coming in here while everything else has been going up. Did you see Tesla? I mean, look at this, though. 26 cents per share. That's not bad. It's not bad. And it's not BITO, but it's not bad if you just buy the DIA. And let's say, but the bad part is, let's look at this, because look at the share size, $437. Remember, you get your dividends based on the number of shares you own, not the dollar amount you have invested. So if you have $100,000, and we divide it by 437 shares, 437, that's 228 shares times 0.26. That means you're only going to get 59 cents a month if you put the same amount of money. If you put $100,000 in the DIA, on your dividends, you're going to get $59. Where if you put it into BITO, you're going to get over $3,000, right? The difference is DIA supposedly continues to rise, right? That's your Dow Industrials. They've been struggling this well, I don't think they're struggling. I think they're just having a blow off, right? I mean, this is common. This is a nice little 3-drive pattern in here. If we come in here, it's really hard on this software. Let's go look at DIA over here. DIA. So we get our nice little drive pattern up in here, right? And then we see our little, we'll just use our little mountain tool. So there's drive 1. And then we get drive 2 is right here. And then we get drive 3, which is right here. And that thing right there had this little pop in here and a little pop in there. That's your A, B, C, and your A1, B1, C1. So if we label those properly, we can take another one, go in here, and right up across there, you get that one. And that's where that thing, we had another one, a little pop right in there, almost like that, just like that. But those are your A's, B. Let's label these just for fun. A1, right? This one come in. This is B1 right here. This is B2 right here. This is C1. This is C2. I mean, kind of. I mean, we could count it the other way too if you wanted. You could count that as a full drive. That would be and you could count this one as a full drive. B1 right here. This one here, B2. So you could actually say this is drive 1, drive 2, drive 3, drive 4, drive 5, right? But we'll look at bulls and bears because it's the boss of bosses, and it is. Okay, it's saying drive 1, drive 2, drive 3, drive 4. So we got a 3-drive pattern, a reset according to bulls and bears, and went to another drive pattern. So if we look at it from the bulls and bears standpoint, which that's the gold standard of your drive pattern. But look here. See, you got drive 1, drive 2, drive 3, and then you say that's drive 4, drive 5, reset, drive 1, drive 2, drive 1. I don't know. It's just all of these little patterns that we're looking for, how many that's going to make. The indexes like the Dow, the Russell, the S&P 500, and the NASDAQ, they do way more than, oftentimes you'll get way more than 3 drives. It's not uncommon to see 3, 4, 5, 6 drives in the indexes. But there you go. So are we going to get a full pullback on this thing back down to the Fibonacci sweet spot? Who knows? We could just get another drive coming in here. But it's got to blow off. It's got to come off. It would be nice to see it break a little bit lower so that we could get, and then take off again. So we could buy down in here. Would you like to be in the DIA? If you would, they're $437 a share. And we're down here. You can see the hike in the chalk and money flow down here saying buy. You don't get very many of those in the Dow. You've got 3 of them right there. 1, 2, 3. We're back here pulling in right now. So it's saying buy it up, baby, buy it up. All right, if you want a little Dow, that would be where you'd put it. But your dividends kind of suck. Yes, they do. All right, let's come back here. How do we get off on this tangent? I don't know. Let's see. All right. That's the Dow. Let's go look at the Johnson & Johnson. We just bought long 7 shares. Did we already did that on JP Morgan Chase? We looked at all these. How come we're clear down here? On semiconductor, realty. This is another stupid realty company. Realty. Who wants real estate? I've made a lot of money in real estate, but I would much rather be over here. So much easier. If you don't want it, you just sell it. NVIDIA. I think we're ready to buy NVIDIA. I do. I think this is it. It's time. This is a little ABC retracement. I don't think we're going to get much further back than that. Where did they put their lines? Where did they draw their lines? That's the Fibonacci sweet spot right in there. And it came back and touched 38.2. That might be all we get. It's not going to come all the way back. I don't think so. I think that's it. I think that's rocket ship time. Could be. I don't know. Come in here and we could go into a 30-day option and we could sell the put right at the money. Click $680 and buy 100 shares of, that'd be $13,000. Buy 100 shares of NVIDIA. We'd like that. You put this down here and collect $380 if we could get it at 38.2, but that probably not going to happen. I'm going to put $3,000 for that. I'd rather sell a call. Sell a put, I mean, right at the money, right there. There's 2 puts, 682, 382. We would really like to get filled right there on NVIDIA. But Lan, if you think it's going to go from here and go take off to the moon, you're going to miss it with your puts. All you're going to do is make $600, $300, and that thing goes to the moon. You're going to feel really bad. You're right about that. You know what we could do instead? We could dump this one, keep that one, because that's a lot more money, $685. And we could price out a synthetic long. Let's see what a synthetic long. We would buy a call and we would sell a put right on top of each other. We're gonna receive $40 to do that, and we're gonna have a margin of $7,000. But remember, if we were to do this with shares, we'd have 100 shares and it'd cost us $13,000. So this is half the price. It's like buying 50 shares, but we're getting 100 shares. It's like trading at 100 shares. So, and they're going to pay us $40 to do it. That's pretty cool, right? So that would be your long position. You ready to put a long on into NVIDIA right there? Well, with some options, I am. And then this one, 677. Let's put that on, baby. Let's put that on. We got to take some notes. Let's put it on first, and then we'll take the notes after. 40. Oh, we have to go down to 20. Do we go this way? I'm not sure which way we go. No, we got to go the other way. We got to go up to positive 10. That's not right. Market. Where does that take us? Oh, we got in that way. All right, there we go. Let's put in our notes. Notes. What did we do? Bullish NVDA. We might be early, but maybe not. We bought a long synthetic call and we sold a naked put. We're bullish. All right, there we go. See if that market goes and rips higher now. On semiconductor, we just sold some premium there. That's just dying as that market went sideways. That's all we're doing there. Pepsi. Oh, wow. Pepsi hasn't hit the bottom of the third drive pattern yet. In 2 days, we're going to get assigned some shares. And that's going to cost us $15,000. Not sure I want to do that. Let's roll down. We want to roll it there. Receive 30. We got to roll it to right there. 15. I'd pay 178. We could, let's see, that's 2 days. Got to get a little more room in here. We're going to roll it. Well, I don't know if there's any volume in here. 9 days. Yeah. At what? At the money? We might be able to pull that off. $10. 9 more days. Just buy us some 9 days. No, we don't want to do that. Just give us a little bit more room and go out a little bit more time. It's 30 days. It's still not very good. Did that change? It did. That's the best we're going to get. We're going to have to pay $222 for that. Wow. That Pepsi, you got to really want to get into some Pepsi down in here. That's a beautiful 3-drive pattern. We should get a little head and shoulders down here in a reversal. Let's go ahead and, that says 9 days. Why is that 9 days? I want 30 days. There we go. Now we're going to receive $11. That's a straight across shot. Let's try that. We just rolled that down. If it'll let us, it's not going to let us. Come on, let me out of this thing. It's not going to let us out. Okay, that's not enough volume and open interest in this thing. Let's kill it. Let's just go liquidate, market, take that one off, and we'll try and put another one back. Well, we'll wait. Well, I don't know. Kind of liking this right here. This is a great place to be buying into this thing. $320. It's catching a falling knife. That's the problem with selling put options. Catch a falling knife. All right, we just rolled that one. Palantir, getting ready to rock and roll again. Away we go. Man, that thing didn't want to pull back. It tried. Just went a little sideways, paid. What do? We just bought a call. Notes. All that we have here, just sold a call. We just bought a call. Sold a put. Palantir. Nothing wrong with that. Just buy a call. Just buy a call, guys. Just buy a call and let that baby rip higher. I don't think you even want to put a covered call on it. Just let it go. Chewy Charles Schwab. It's coming back. This is the bottom of the previous Darvis box. Actually, I'm going to put that Darvis box. See that? There's our Fibonacci bow tie off of that piece right there. Well, I don't know. There's a little pullback there. That's why that Darvis box is there. It's right there. We could come back to here. We'll see. We'll have to see. We're right there right now. Charles Schwab. Let's draw our little, let's see where this thing ends. We need our next triangle. trying to give us an opportunity to buy into some Charles Schwab down here. Run your Fibonacci ruler across their land. There you go. So it's coming back into the sweet spot right here, into the delta cone. That's all the way back down into the other. That's all the way back down into the other Darvas box. I don't know. Drive 1, drive 2. This should be drive 3, but that's really coming back hard for drive 3. It should have stayed up there. Why is Charlie coming down? We could wait for it to come down a little bit more, and we could sell a put down here, collect a little bit of money. That's 163, but at the money is 276. Oh, well, the share price is only $75. This is a good one to trade for smaller accounts. You could drop that and receive $90 right at the 50% level and receive $90. And then if Charlie Schwab came down here, you could buy some Charles Schwab at $72. That would be good. Or you could wait. You could wait for it to come down, but then you might miss out on your $90 because it might start to rally and take off. Oh. Let's wait on that one, see what it does. Watch Charlie. He's a good one. Here's Pterodyne. We got some Pterodyne. Look at that baby rock and roll now. See, everybody's scared to buy when it comes down into these low regions. That's why you use options. Just drop an option in there. Remember, everybody was saying, don't buy Pterodyne. Pterodyne sucks. Well, it's because it was down. Nobody likes to buy low and sell high. They all want to buy high. So we bought Pterodyne right here. We got into Pterodyne clear down here when it was hitting those yellow bars down in here. Now everybody's like, Pterodyne's great. Too late for you, suckers. All right. Trust Financial Corp. We don't want them. Boom. See ya. Pterodyne, Tesla. Oh my goodness. Have we got FOMO on Tesla or what? And I've got about 60 grand in Tesla. Not nearly enough. I'm feeling really bad. That's all I got in Tesla. Well, we just put an option in here. I think we made a big run here, made some money, we took it off, right? And now we said, well, we want to buy some more, but Tesla's not going to give us a chance to buy more. Although it's not breaking yesterday's high today. Maybe we'll get a little bit of a pullback and we can get an opportunity to get in there. We're going to receive $500 on this one. That's all we're doing is just selling some premium. We'd love to have some Tesla at this price. Texas Instruments. All right, looks like we're at the bottom of the ABC pattern, right? A, B, C. So we come through and, guys, we do all this analysis on all these charts. I don't expect you to put all these on in your real money accounts. This is come and figure out which one you like best. Just pick 1 or 2 or 3. You don't have to have them all. We're going to look at these and do analysis on them, put some simulated trades on them, see what they do. You guys can decide which ones you want to put in your real money accounts. That's why we do this, right? Just work through it together. Just like friends do. We're just friends in here saying, hey, what do you think the market's going to do? Oh, I don't know. Maybe break a Fibonacci ruler. Who knows? All right. What are we going to do on Texas Instruments? We sold a put right here. Kirk says he's got 100 shares of BITO and he's got some. Oh, that's Bruce saying his BITO's up. Okay. Just going back and forth between the chats over here. All right. What are we going to do on Texas Instruments? I think we're in a good place to be buying up some Texas Instruments. It'd be nice to have some Texas Instrument right now. Look at this big green. This is nice. Buy Texas Instrument. Think about Texas Instruments. Let's go look at it from a fundamental point of view. TXN. The reason I think Texas Instruments is one of our, see, it's $1.36 every quarter. Share prices are $189. So it's not the greatest. But if you're going to own the shares, you might as well get that little kick in the pants every 3 months, right? Let's do a little math and see how much that would be, just for fun, just for funsies. All right. We'll do 100,000. Let's say we put $100,000 into Texas Instrument. We divide it by 191.54. That gives us 522 shares. And every quarter times 136.36. That'd be $710 divided by 3, make it even, about $236 a month in dividends. But remember, dividends are profits that the company is sharing with you. And when they do that, it's common to do it every 3 months, right? So they're going to give you $236 basically a month, but they're going to do it every 3 months. So $236. We have to put that into the spreadsheet and we can see what the yield on that is. How many of you have my spreadsheet for yield calculator? I need to put that out on the, did I put that out on the, I don't think so. I think I just gave it to my university class. I've got a yield calculator, little spreadsheet. It's how I do mine. I think it's right here, right here. These are a couple, I gave this little spreadsheet away to my university class, just a little yield calculator. You can put your stuff in here and see what the yield is. And it's kind of a cool little calculator. Well, I'll figure out how to get that out on the internet and let you guys have it. I'll give you the link to that. Maybe I already did. I can't remember. All right. So you can just pop this stuff in there and it'll just calculate the yield for you and give you a projection and tell you, what you can expect. It's kind of a cool little calculator. So earnings per share down. I think we already did this. Upgrade, October, November, Wells Fargo. The thing is, Texas Instruments just going sideways. It would be a good one to put. I don't know if we could expect any big news coming out of it, Texas Instruments. We could just put a neutral option strategy. We got an option here that we sold. So we were trying to pick up some premium off of that one. We're trying to pick up, we're going to get our option. We're going to get some shares right there. This thing expires in 2 days. We'll get 100 shares of right there. That's not a very good place to be buying 100 shares. There's markets down here. It'd be better to buy it down here. We could roll it down there, but wow, what's the use? Liquidate, roll the option down. We would rather to buy 100 shares down here. But how much do we have to give up to do that? $200 to get in down there. Oh, $500. $396 to roll our option down. I don't know if that's that's just 2 days, just trying to gauge whether we want to just pay $396 to get our options, get our shares down here is up there. How much is that? It's $500. So if the market rallied back up, we'd make an extra $200 in our shares by rolling this down today and getting the shares down here instead of up there. Let's see if we brought it down one more. Click. If we did that and got it, of course, we might not get a sign down there. We pay $500 and then we'd make $730. So it's still it's still $200. So you make an extra $200 on your shares by rolling it. It's worth it, right? But we don't want to pay $500. Let's just put it up here. More likely to get our signed. We want to get it signed. Let's roll it. We'll make an extra $200. Of course, if it rallies, and we don't get our shares, we'll have to self-assign. That's what we'll have to do. Oh, the spread. The spread is going to kill us. Holy cow, takes all our profits. Forget that. We ain't going to do it. Just leave it where it's at. Oh, that's a covered call anyway. This is our synthetic long. Is that a synthetic? Where's your notes, Lan? You didn't take any. What the heck is going on here? We just sold a put down there. 30-day. Oh, we just sold a put down here for $214. Well, there's the $200 that we were looking to make back right there. You just have to wait for it. Oh, okay. We just sold two. All we did was we sold a couple put options looking to get assigned. All right. I guess that's where we're at. ExxonMobil. Holy cow. I told you to sell ExxonMobil. I said, Donald Trump gets elected. He's promised to pump. Down this thing is flushed. It's down there at a buy point now, though. You want to buy ExxonMobil? If you do, now's the time. Except for if they open up the spigots, I don't know what's going to happen with the ExxonMobil if the price of fuel starts to fall over the next year. Supply becomes greater than demand. Prices are going to go down. And I don't know what that'll do for ExxonMobil. But it's in a buy zone right now. If you want to buy some now. It's down here close. So you can wait for it to cross the yellow dots. Wait for the little ABC pattern like this. Wait for it to do this. Take off, get a little ABC back. But I don't know if it's going to go back up. I'm not real bullish on oil stocks right now. I don't know. It's pretty high. Pretty high. What do you want to do? Nothing. Leave it on my watch list. I do want to go over. This is going to be a long class. But I got to study. I got to do this. I'm doing it for myself. If you guys want to come along, great. You're tired and sick and tired of watching me study the markets, go do something else. But if you want to stick around with me, I'm going to sit here and look at them a little bit longer, and I'll do it with you. There's more I want to do. I'm going to do it whether you're watching me or not. Doesn't make any difference to me. I'm going to come and look at these markets whether you're watching me or not. So might as well just leave the recorder on and talk to myself. Anyway, so you're welcome to stick around and watch me look at the markets. NVIDIA. Did we go look at NVIDIA? We didn't. Let's go look at NVIDIA and see what NVIDIA is doing. NVIDIA. Oh, we did go look at NVIDIA. We're actually long NVIDIA. We think NVIDIA is going to go. NVIDIA popped today, so we're happy with that. Uber, that's the one we want to look at. Uber. Yeah. I got to look at these markets anyway. Gonna look at them anyway, whether you guys stick around and watch me do it or not. That almost looks like a nice little 3-drive pattern. Drive 1, counter trend. Drive 2, counter trend. Drive 3. We're at the bottom. And that's a nice rally bar. I don't want to do it today. I don't want to buy into it on a rally bar. Of course, it could just take off and go to the moon. That's what it has a tendency to do once it gets green. And it is at the bottom of a 3rd drive. Man, what do you do? Well, we could dollar cost average into this thing. We could self-assign ourselves something. Wow. Uber. That's a good place to be buying Uber. The implied volatility is going to be really high in comparison. Let's go look at the options chains, see what we got going down here. It would be nice to be long from down here. Implied volatility is 47. 637 for premium. Let's go look at the view. We got to go look at the options tab. We got to go, where is it? Options calculator. We got to go look and see what interest rates are. Because we're going to go out 100 days. So we got 30, 90 days. We got to go 22, 4. We got to go down to 4.38. 4.36. Let's go put 4.36 in there. Let's do 4.38. So we will drop that down 4.38. Okay. So that adjusts our theoretical value. Holy smokeroonies. Call options right now. Look at that. A 93-day call option theoretical value is $696. You can buy it for $640, even with an implied volatility of 47. Nobody likes Uber. Wow. Huh. $640. Well, they're now $695. Oh, that's right at the money. That's perfect. That's perfect. Buy it. A little bit of a value. If we buy a call and we sell a put, that's a synthetic long. That's going to cost us $173. And it's the same as owning 100 shares, but it's only for 93 days. So it's got to perform in 93 days. Got to make its money. Got to go. Got to go, go, go. Market buy. Okay, so we're in that, baby. Let's write it down. BOUGHT, bought synthetic long position with 93 days till expiration. I like this one. I think we'll put this one in the real money one. I think after class over, I'm going to go put this one on. This one is a good one. I like this. It's down here in a good spot. Do you want to sell a call against us? The question. If we come in here and we do a 30-day and we sell a call, we could collect. You might want to wait and see what it's going to do after this. That's $137. That's 30 days out. I don't know if there's any. Oh, my goodness. Where's that? That's not very far out. But that would be like right there. I want to do that. I don't want to stifle my rebound. If this is just going to give us a V recovery, get Uber to come back up into this region here. It likes that region there. Okay, we're just going to sit on that for a second. We're just going to sit on that for a little while. See how that turns out. What's the next one we want to go look at? Uh-oh. Oh, here it is. Where did my bubbles go? CVS. Wow, look at CVS. You get one little pop on a big drop like that. CVS. CVS. Wow. CVS. What's the dividends on that one? 66 cents every quarter on 45. Let's do $1. Let's do a apples to apples comparison. Let's put 100,000 divided by 45.89, 45.89 equals, we have 2,179 shares times 0.66 equals $1,438 every 3 months divided by 3, $479 a month on average for CVS dividends. And it's trading at $45. It's just too bad they don't do a little bit better. I'd really like to see 66 cents every 30 days, CVS. That would be nice. But they don't do that. That's why we have to do it ourselves. That's why we sell options and do covered calls so we can beef up our dividends, right? because we can make $500 or $500 in 30 days. That's better than what they're giving us. And that's what a covered call is. A covered call is basically dividends that you control yourself, right? I mean, you're like, oh, I would like to own this and have some dividends on it. Okay, well, own it and sell a covered call, and that's collecting dividends. And instead of getting 66 cents every 3 months, you can get 66 cents every 30 days. That's what a covered call is. It's just trying to figure out a way to get your dividends a little bit higher, and you use that to give you a higher dividend. That's what it is. That's why you do it. That's how it works. Selling covered calls, collecting premium is just a way of synthetically creating dividends for yourself. All right. Let's find out how come this thing's flushing down. Earnings per share. 2023 is 647. Earnings per share year over year is 629. So our earnings are down a little bit from last year, 647 to 621. Our sales are, well, last year was 358. What's sales now? 369. That's even higher. Higher. But earnings per share are lower, but the stock just flushed. Shares, they've been buying them back a little bit, trying to prop things up. Not too much, though. Look at all these. Deutsche Bank, Wells Fargo, Barclays. Upgrade. Oh, that's funny. These guys upgraded in October. These guys, this goes to show you, these guys don't know what the hell they're doing either. They upgraded right here in October only to have the market flush like that. These guys upgraded. These guys upgraded. All three of these, look at these, all upgraded when the market went flushing down like a toilet. Just to prove to you that these guys don't know everything. Deutsche Bank, they upgraded December 3rd, which was December 3rd right here. Deutsche Bank upgraded only to have the market flush like a toilet. It just goes to show you don't pay much attention to these things. I mean, they move the market a little bit once in a while when they make their predictions, but you can see every single one of those was wrong. Every single one of them was wrong. If you go back to May, downgrade on May. Let's go look at May and see what happened. Probably went up. Right here. They all downgraded it after it already failed. So it flushed, and they all downgraded it right here. It went sideways, and then they all upgraded it right here. We're going to upgrade it. The market's going up. Let's upgrade it, and then flush. They don't know what they're doing. They're not good at Fibonacci and Elliott Wave like you guys are. Who knows? Everybody gets a guess. Even the big boys get it wrong once in a while. All right. So they upgraded it back here. Deutsche Bank upgraded it at the 1st of December, only to get their hiney handed to them. But maybe it's now a good time to start looking at this thing. All right. So if we look at the bubble scanner, that's why it's up on here, right? Where was it? But that's where we found it. So it's down here now saying buy. What do you want to do, guys? What do you want to do? That'd be a good place to get into a little bit of CVS if you think you got a future in it. And the fundamentals are pretty strong on it. Might want to just wait. We could wait and see if it wants to cross that, give us a little pattern down here. Right now it's still flushing. Be trying to catch a falling knife. So let's keep that one on our watch list because that's a good little buy right there. You can start buying in. There's nothing says you have to come in with an option or 100 shares. You come in, look, you know what? Just come in here and buy. But let's put in $500. Could do that. Just be cautious, careful. We'll buy 10 shares. Start dollar cost averaging down. You come in here, look, we'll put in another 10 shares down here. Look, we'll put in another 10 shares down here. 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 Who cares, right? I mean, it's just like 10, 20, 30, 40, 50, 60. We haven't got even to a one option yet. We're just buy 10 shares as the market comes down and your dollar cost averaging down. You could do that. There's nothing wrong with that. Eventually, the market catches turn, start to go back up. Problem is, I think you have to have your coverage on these. Does it change that if we move that? Nope, it doesn't. So we're just already at the limit order. We just leave those in there just for fun. All right. We'll put some notes in here. Just for fun, we decided to dollar cost average into CVS with 10 shares each. All right. Nothing wrong with that. If we could get 100 shares, that's only $4,600 for 100 shares, right? And then if we had 100 shares, we could start selling some premium against it and collecting our own dividends. We could come in here. That's 10. So if we do 10, 20, 30, 40, 50, let's do this. Let's come in here. We'll go trade, go 10 more, buy. And we'll come in here and we'll edit that one. And we'll, oh, you know what? In the stock market, they don't let you edit your tickets. Bums. Not like the futures market where you can do what you want. Last bastion of true capitalism on earth today. We're just going to come in here and we're going to just say, look, we want 100 shares and we're going to do it like this. Dollar cost average in. We're probably most certainly not going to go all the way down. 20, 40, 60, 80, 100. There you go. There's your 100 shares. At some point, this market catch and turn and start to go back up, right? Maybe. I mean, that's the idea, right? The theory. And then you're going to have your however many shares, and then you can start dollar cost averaging on your way back up too. Well, as soon as you get 100 shares, you can start selling premium against it and collecting dividends. I'd call it UBI. If you're collecting dividends, then that's what this is, right? This is dividends. These are dividends. $500 every 3 months, whatever. That's a dividend. But if you sell premium against this, and you get your premium from selling options, I call that the UBI, Universal Basic Income, because that's not dividends. It's something else. So what is it? It's UBI. It's how you make money. That's how you make income. All right, because you got growth, you got your NAV, net asset value of the underlying stock, and then you got to make money off of it. It's like the NAV is the rental property, and the collecting premium or collecting the dividends, that's rent on your property. So by selling covered calls and selling premium, collecting premium off of naked puts, that's collecting premium on your net asset value, right? So it's rent. We want that rent to be high. We want that to be high rent. We want to be slumlords, man, slumlords. All right. Where are we at here? What's the more fun ones to look at? NVIDIA, Uber, Palantir we looked at. Micron, but it's way up there. 110. Man, it took off. It gapped up. Probably get a little pullback. We'll keep an eye on that one. That's Teradyne. We already looked at that one. These are small, not a lot of volume on them. CVS, United Healthcare is $500 a share. Boeing. Look at Boeing. Holy smokes. Everybody was against Boeing at one point. Look at love. Southwest Airlines. Delta Airlines. Remember what Delta Airlines did? And I actually think Southwest is more loved than Delta. We should go look at that one. But look at the time. It went, but it's got a tiny, tiny volume. Target. See, I got this set to volume. So the circle size is the volume. Oh, we wanted to look at Disney too, didn't we? What's this one? Oh, we already looked at Tesla. Amazon. And Ford. Ford is flushing. Might want to go look at Ford. Buy low, sell high. Pfizer. Nobody likes Pfizer because of the shots. But they're starting to rally. They're coming into that looks bullish to me. Huh. What do we want to do with Pfizer? People are looking at Pfizer, PFE. Look at that. Not going to be very good if we want to run out of money. 30 days, sell a put down here. How much we get? Nothing. $48. That's because they're going the wrong direction. What if we came down here and did 93 days? We bought a call. It's $154. And we sold a put. Pay $33. Margin requirement $741. Could do a couple of those. Place our order. 33, 31. Come on, fill that baby. Okay, we got that one. So we're long Pfizer. Running out of money. Disney. We wanted to look at Disney, didn't we? DIS. Ooh, look at that. Ooh. Disney's going to the moon. Man alive. That thing broke out. Now we got our... Is that what that is? Look at that, guys. Okay, let's do it. Buy a call at the money, 710. Sell a put, pay for it. Pay $195. We got a margin requirement of $3,358. Plenty good on that one. Okay, let's see what else we got coming here. Disney. Ford. Amazon. Tesla. Target. What? What happened to Target? Target. Carnival Cruise. Pulling back. What are we looking for? We're looking for good patterns. Bristol Myers, watch list. PFE. Bank of America. Let's go see if there's any options on Bank of America. Bank of America. Look at that thing. What do you want to do with that one? Anything? I don't know. It's coming right back to the high right here. It's Fibonacci sweet spot. Or Fibonacci bow tie, but it's ugly bow tie. It's definitely going into the next Darvis box. So this is our Darvis box, and that thing ended right there. So we got another Darvis box, but it's coming to the bottom of that Darvis box. How big is that thing? I don't know. It's a big Darvis box. Wow, that's a big projection. I'm going to stay above that line. Options. 93 days. Buy a call. Sell a put. We're just going to do synthetics here. And if we like them, we'll sell some covers against it. We could do that. Let's mark it into this. Not enough buying power. Not enough money. We're out of money. We're out of money. We're out of money, guys. We're out of money. $300. Buy market. Okay. Oh, they're going to let us do some more. Nope, they're not going to let us do not even one more share. We got everything. We got our entire account into the market. We're going to have to go clean some out. What's today? Today is Wednesday? You're right. It is Wednesday. Today is Wednesday. Tomorrow's Power Hour. So we get to do a little bit more, see if we can make some more money to bring over here, put in the stock market, right? So yesterday we had a good day. We had a really good day using the Minesweeper. I think Minesweeper has turned into my best strategy. We went off on a few tangents and tried a few things, but I think we keep coming back to the Minesweeper, don't we? So tomorrow we'll do Minesweeper again. All right, let's try Minesweeper tomorrow afternoon in Power Hour, 1 o'clock my time, Mountain Time. So we will see you guys there. And I do have Sunday school lesson for you. I know it's a long class. We have to end with a Sunday school lesson. So here's your Sunday school lesson. Don't be a market hopper. Do your pre-market research. Pick your top 3 or 4 markets. Plan your trade and trade your plan. Don't jump around after the bell looking for a better market to trade. I guess that one's talking a little bit more about day trading. When you're day trading, try to stick to a couple markets. We didn't do any day trading today. Mostly we're just looking for our positions to get a little bit of money into the markets, but we could have done some day trading. I think a couple of these markets would have been good to day trade. NVIDIA, of course, really popped. Palantir, PLTR. Let's go look at that just for fun. PLTR. We're going to go look at the Palantir just to see what the intraday market was looking like. Palantir, let's go look down a 2-minute chart and see if we could have day traded this today. Probably not. 7:30, it went like straight up and then it just died after that. And it did it all in 2 minutes. I don't know. It's an ugly little chart. Would have been a tough one. Well, maybe not. I don't know. It kind of adhered to it's been adhering to the market a little bit. It's not bad. I mean, just trade the arrows, Land. Just trade the arrows on Palantir. Let's see if we could have done it with options. 2 days. We could have done it with options. There's plenty of volume, plenty of open interest. We could just sit here and goof off with options all day. How would you do that? Well, you know me. I like to sell premium at my buy spot and just see if I can't collect a little bit of premium on the way out. That's $200 right there. If we put that one in, as long as it stays above the red line, we'd get our $200. But that's 2 days. We see what happens by the end of the day. So you just drop that in. We don't have any money. Can't do it though. Cancel. It would have been fun though. We got our long call right here. We could have done a little day trading on Palantir though. It looks like it would have been okay. We'd have had fun. All right, guys, I'll leave that to you. Have fun. Then we'll see you tomorrow for what's it called? Power Hour. Okay, take care.